Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. We've got a lot going on today, the least of which is basically right now. Tonight at 9 p.m., if you weren't aware, time to make y'all aware. If you weren't aware, there's going to be a fairly significant hot zone. We've got three major hot zones scheduled, high impact, and macroeconomically important events. Tonight, the president will be speaking in front of a joint session of Congress. On Friday, we get non-farm payroll. And we also hear from Jerome Powell, as well as a slew of FOMC chuckleheads throughout the week. But once again, on Friday, so Jerome's on 12:30 p.m. Eastern Friday, non-farm payrolls 8:30 a.m. Friday, and tonight at 9 p.m., we've got the president speaking. Now, look, all of these are events that are going to change traders and investors' minds about what they want to do next. So there's two things to really discuss as we get into this. One is if you want to trade tonight, I've traded during debates, futures, Forex. It's a lot of fun. It's higher risk. It can sometimes offer some interesting, useful volatility. How do we measure volatility, gang? Well, let's talk about that really quickly here. Tonight, I'll be using the hourly price movement ranges for the 8 to 9 p.m. part of the evening, and I'll be watching the event while I look at price action. What is technically solid during that time? I would focus mainly on the S&P and frankly the Nikkei. I would focus on different currencies. I remember during the 2016 debates, I used to trade the Mexican peso on the Forex while watching the debate. So that if you are comfortable with futures and Forex, that's what it will be tonight. Now, what if you don't trade futures and Forex? What are the implications for this evening? Tomorrow, right? Are a lot of traders going to go long into tonight's event? Probably not. In fact, the first inkling of that we can see on the daily time frame with prices moving lower. We've taken out yesterday's low, but we're not trading below 58.22 right now. The low is 58.21 and 3/4. So there's not more commitment to the downside in terms of yesterday's low, but we've been willing to pierce it, even though here pre-market we've bounced from that level, but a heavy candle to start off the day. So the next thing is, how are we positioned? I'm going to put this in the notes here. How am I positioned in the sector secrets mastery, right? All right, how am I positioned in the mastery? Really simple. I'm positioned in the mastery in defensives primarily, and one relative outperforming sector and stock. So defensives are what? For those of you that are unfamiliar with the techno babble of, Ron, what's a defensive? Defensives are things generally in staples under the XLP umbrella, that ETF, and utilities under the XLU. We've got long positions in staples, utilities, Coke, as well as, what else are we in? Coke? I think that's it. And we have 6 open swings right now. Of 6 open positions. And the other one is taking advantage of the sector that doesn't seem to really care about much else going on in the broader averages, not in a huge way, but we're also taking advantage of the strength that has been in healthcare, and more specifically, the freight train that has been Johnson & Johnson. If you're not focusing on relative outperformers, that's exactly what I do. That's exactly what I teach. And that's where, for a lot of traders, they find the follow through. Gang, we can talk about volume and institutions and volatility and hedge funds and algorithms and trends. But at the end of the day, the thing that we're looking for, the thing that I'm looking for most, is what is already moving. It's physics 101, right? What's already moving. And that's exactly what we're positioned in. In fact, I probably have, hang on, I can show you exactly what I sent out to our Sector Secrets Mastery folks, which happens to be, by the way, the biggest mastery here at Simpler, and probably for a pretty darn good reason. We have a great group of traders who are focused on trading, not news, not politics, not nonsense. We are focused on how to manage risk, number one, and how to find those relative outperformers, number two. This is what we've got. We just scaled out of a winner in McDonald's. When all else fails, burgers and Coke have been pretty darn good. Coca-Cola and Big Macs. And that's our current position. We've got 2 positions in staples. We've gotten into those 21 March calls on 2 separate occasions with 2 separate setups. And then you can see everything else. So this is where we are positioned. And then if you notice the T1 scale out, every one of those are positions where we've already paid ourselves, scaled out of some of the position. We're looking for higher highs. And in the meantime, we're managing risk after paying ourselves. So this is what the current book looks like. And by the way, gang, that's kind of the job. In these conversations, I'm going to talk my book, because what else is there to talk about? There's really 2 schools of sort of trading that's existing out there. One's not really trading at all. One's analysis. One's talking about what has happened and making, guesstimates on what could happen. And the other is, here are my positions. And by looking at the positions and understanding now what staples are, you can say, okay, Rog, I get what you're doing. You're long and you're long defensives. A position says everything you need to know about what that trader is thinking and frankly doing. And that's what we like to stick with here. All right. The next thing is, a lot of folks have been asking me, okay, Rog, are institutions concerned about tariffs? Are institutions concerned about the winding down of the rate cuts? We're expecting maybe 1 or 2 more this year. And here's where I'll tell you, and by the way, it's a big topic. And what I thought I'd do, since people have been asking, what size? Size is volume, gang. That's really it. Size is volume. And I will go even more specific to what that is. It's price-based volume, right? It's price-based volume. Who is the size? It could be a mix, gang. It could be retail traders who are probably more influential than ever. It could be obviously hedge funds and banks, kind of under this larger umbrella of institutions, right? The who is less important to me than the actual placement of the size, right? How do you track it? You track it with a couple of tools. One, and I like to do this on TradingView, and I've taught this for years. I do this through TradingView, and I do this through a number of tools. One, I do it through something called, I just got an email yesterday from a member. Actually, I don't even know if it's a member. I think I might have been just helping out a trader who asked, what is the tool you use on TradingView to track price-based volume? Really easy. It's called Visible Range Volume Profile. And you can see that running along the right edge of this chart. That's size, gang. You want to know where institutions are? You want to know where retail traders are? You want to know where the hedge funds are? You can't hide the size, right? You can't hide the size. And that's really going to tell you a lot about, for example, when we bought Johnson & Johnson, thought, all right, as long as we can stabilize around 163, I've got size at my back, not something I have to contend with to the upside. All right. So those are things to keep in mind. And by the way, I realize this is such a huge and timely discussion. Where is that size? Where are the institutions? How do we identify those levels? I'm going to put that in the free video tonight. It's something that's easy to do. There's no magic here. It's just knowing the right kind of question to ask. What do we use to understand big players, institutions, hedge funds, retail, algo, whatever it is, right? That's going to be using volume, price-based volume. And I'll go through that in the free video tonight. All right. That being said, let's also take a look at some of the questions that have popped up for Charts and Coffee. All right. Starting off with, good morning, Yeshua. Because of you and your team, I made over 200% last month. Very nice. But today may be a nice buy on a huge dip. Can we take a look at UNFI? Sure. So this is part of the peanut butter and jelly, PB&J, food and beverage ETF. Yes. So again, starting with where there seems to be relative outperformance, I would be very cautious. So if we look at here, I'm going to show you what we do in the room. And this is a process that has been the hallmark of my trading for decades, which is where is the relative outperformance. And then once I find those, that's how we're in XLV, right? And then once we find the relative outperformance, can we look at the stocks within that group? It's PB&J. That's why I call it the peanut butter and jelly ETF. And this is where you'll see a number of names, everything from DoorDash to Kroger to Coke, Keurig Dr. Pepper. You'll see UNFIs there as well. I would shift my attention to something we already have. Yeshua, Coke and Keurig Dr. Pepper. That's what I would focus on here. And I'm actually not allowed at this point in my process to touch UNFI. See that red candle that printed yesterday? No can do. But because I want to focus on defensives, that's where Coke really shines. You see that? Fantastic. Yeah. So a lot of times what happens to traders is they lock in to a particular symbol, especially one that's recently paid them. I get it, right? I'm probably guilty of that from time to time too. But as long as I realize that my watch list has to be fluid, my watch list has to be fluent in the relative outperformance, that's where something like UNFI, it did great for you. I love it. But moving forward, readjust. And that's where, as I showed you all earlier, again, positions matter a whole lot more than analysis. What ROG do you have? And you notice front and center, or I should say top of the list, Coke. And then if you're wondering, okay, ROG, what else might I look at in that group? Let's open up XLP. So this is the staples. And you can see Coke exists in both places. Look at what looks great here. This is why we're in these. Coke, Procter & Gamble, Philip Morris, Altria, Mondelez, Kimberly-Clark, and there's your Keurig Dr. Pepper down over here in the corner. And that's in this lower right-hand corner. And then XLP itself. If you like enough of the boats, go with the tide. And that's why we have that XLP position as well. All right. Can't get married to the symbol. It's so easy, especially when it's one that's paid us in the past, just to want to jump in and see what's next. But if the right edge of that chart is telling you, hey, probably not something I want to do, I would leave it alone. Hey there, David, how are you? What are my thoughts on MS? Oh gosh, stay away. Stay far, far away, my friend. That's, again, look at the daily time frame and don't just take my word for it, right? ROG, what do you see on that chart that doesn't allow you to take advantage of whatever might happen next in Morgan? I'll show you right now and for how long it's been that way. Take a peek at the red candles, the first one starting there and even yesterday's. So those red candles, my process based on my tools, these are top tier candles, okay? Based on my tools, I am not even allowed to look long. And frankly, it's not even a great opportunity for a short, or I'm not allowed to be long calls. And it's probably not quite ripe and ready for long puts. So I would leave it alone. This takes us over to the financials section of the broader averages. And by the way, yesterday we had a lot of dips. And in the Sector Secrets Mastery, because we're actively from 9:30 to 4, you'll notice it's hundreds and hundreds of members actively looking for opportunities. And a lot of folks said, ROG, this is dipping and this is dipping. And I sent out an alert to members saying, you know what? We've got 6 open positions right now. All 6 of them can be scaled out of, meaning now they're in the profit side, the reward side of the risk reward. All of them can be risk managed. We have a process for that. Let's wait until after tonight. This week, gang, is going to be raucous. It's going to be wild and woolly. Why? Because tonight we have, really frankly, a political event. We don't trade politics. We don't even talk politics. But to ignore the impact on market sentiment would be also ignorant. So I acknowledge that. We've got probably the biggest hot zone. There's 2 hot zones that are competing for our attention. PCE, CPI, right? The inflation metrics, and jobs, non-farm payroll. And that's on Friday. So it's a really important week in terms of information. What we didn't know now, we might have a better idea of at, say, 10 o'clock tonight. And I'm tapping the brakes on 6 winning positions, but I'm also tapping the brakes on new entries until we have a little bit more information. So that's another reason I would steer clear of anything that's high concentration weighted in the NASDAQ, Dow, and S&P. This one's the number 1 weighted sector, XLF, in the Dow, number 2 weighted in the S&P. The only things that would be rather interesting would be Berkshire Hathaway, Visa, and PGR, right? So those are the 3 uptrends here, Progressive, Visa, and Berkshire. And so everything else I would leave alone. I really can't trade those things with red candles. I don't want to trade things with at least 5 green candles in a row or in that trend. And take a look at the labels. It makes it really easy for me just to see a traffic light, simple, binary, hey, yes, it's in an uptrend, or no, it's not. Because if left to our own devices, if we want to be in something, we can talk ourselves into it. Our brain will start to match the thing that we want. Trading what we see, not what we think. And I try to make it really blatant as far as what I see by just saying, hey, you know what? This is not a trend. This does not have the green candles or the red or whatever that I'm looking for. All right, next question's on gold. Oh gosh, gold. Yeah, David, I'm with you. Gold has been unbelievable to us since January 27th. We've had 4 different entries. The last one, by the way, I closed out at a slight loss, but gold was my first, gold futures, or it was my first big trade of the year. We took GLD from $416 to over $1,900 per contract. Yeah, it's been really good. I'm gonna be a little cautious with gold. I would love to get in again. I agree. We took advantage of it at the end of January because this was all in this gorgeous. Take a look at this indicator at the bottom of my screen. All of this was in this gorgeous uptrend. And now you can see it's wobbling. We use that term wobble, where it's still bullish, but it's bullish chop. I don't mind to look at gold again. It'll definitely be on the radar. And I have to remember, what was is not what is. We took advantage of a huge move in gold while it was in a trend. It's back into chop. Doesn't mean it may not start trending again, but I've tapped the brakes on gold. We've had a great time with gold throughout February. Again, our first alert in gold was January 27. It was one of 4 different alerts we sent out in the mastery. Right now, you can see where my attention's at. Defensive. And could gold be kind of a defensive? Sure, we could probably put it in that camp, and we can start to slowly maybe add it back into the watch list. Yes. All right. So I've been kind of tapping the brakes on that. Let's see what else we have here. As far as XLF, yeah, Jas, we took a look at XLF. Not much I want to do there until after tonight, and mainly because where the S&P goes, where the Dow goes, XLF will be hammered if we start heading lower. It's probably not going to be like healthcare, right? How come healthcare is on your list, Rog? Because it has not in any way cared at all about what's going on in the broader averages. We definitely see flow here. You can confirm it with size, right? There are some other things that you can look at to understand size. Flow is one of them, and volume, price-based volume, is the other. And we've had flow in XLV, we've had the volume, we've had the size, and we've had the candles. And that means the participation is definitely in our favor. All right, I've got just a minute here, and Scoop is asking about XLU. Yeah, Scoop, if you just joined, yeah, we've got an XLU long position. There was a crazy wick yesterday. We've got the 21 March 77 calls. You know, this is a great reminder of something that we do in the room, which is when we have open positions, when we're looking to build an open position. See this crazy wick, right? That's nuts. I don't know what that was, right? But by not having an order to exit, a stop order in there, and instead an alert, that didn't in any way affect us in the mastery, because when we get back down to, in the case of XLU, because it's profitable, we get back down to that level with a wick, and you have a stop order there, whammo, you're stopped out. But if you have an alert, the alert goes off. I either open up my phone or my laptop or whatever, take a look. I looked at this, my alert went off, and by the time this is a 1-minute chart, by the way. By the time I even opened the chart up to look at what the heck is my alert going off for, it was already snapped back up to 79.33. And that's a really easy way to avoid getting wicked, right? What do I use that term, wicked? That's a Ragheeism for, I don't want to get stopped out on something crazy like that. I've been trading Forex for a long time, and these kinds of crazy wicks were very common. And one of the reasons I built the habit of placing in alerts was twofold. One, I'm trading a 24-hour market in the Forex, and I couldn't possibly watch it all the time. And 2, I don't want to get wicked out of things on these crazy moves, which is pretty common in the Forex. So I just carried that over to my futures, my stock, and options trading. All right, gang. I'm still in it too, Scoop. I'm with you. All right, gang. So that's a wrap. Thanks as always for being here for Charts and Coffee. Be sure to check out tonight's free video. I will walk you through all the details of finding size, where it is, how to track it. And I actually use TradingView for it. And there's some very cool free tools within TradingView that you can use. All right, gang, be good to each other, and I'll talk with you soon.